Hello and welcome to another BetaKit Live. I know you're probably more used to seeing BetaKit Editor-in-Chief Douglas Soltis on here, but I'm Megan Simpson, BetaKit's Associate Editor, and behind me is my cat and co-host Dewey, for those of you interested. But what I'm really excited to talk about today is the topic that we have, and to especially just speak about it with the group of panelists that we have here today. So we're going to be talking about driving innovation through impact investing. So kind of the impetus around this, just over a year ago, TELUS launched its Pollinator Fund for Good, an impact fund with the potential to commit up to $100 million, making it one of Canada's largest corporate impact funds. And while TELUS is definitely not alone in Canada in its impact focus, what Canadian investors do in terms of impact investing in the country is still just like a drop in the bucket compared to what's happening globally. So today we're here to talk about what exactly is impact investing, what does Canada need to do to have, greater commitments to impact investing, and where is this field going? We have a great group of individuals here today to discuss all of that. So introing them, I'll introduce you guys to Blair Miller, who joins us from the TELUS Pollinator Fund for Good, where he serves as managing partner. Amit Bori is the CEO and co-founder of the Global Impact Investing Network, which works with investors to support their impact investing. And Chetty, the CEO and co-founder of Gotcare, a TELUS portfolio company that provides personal home care and just raised some money that you could actually read about on BetaKit. Really excited to have you here, all of you guys here today to have this conversation. So welcome. So with all that said, this is not a one-way conversation. So no matter what stream anyone is watching this on right now, whether it's Twitter or Facebook, we'll have BetaKit team members watching so you can post comments. We'll get those comments to me. We'll make sure that we share those questions with our panelists. They can also answer those questions for you. Or if you're watching video on demand after the stream, don't worry, because we're going to get the recap of this discussion on betakit.com with a video and write-up, and we'll get all your questions answered there. So with some of that housekeeping stuff done, let's dive in. I'll briefly, talk what is impact investing. These are investments that are made with the intention to generate positive social or environmental impact, but still very much paired with financial return. Popular sectors will be sustainable agriculture, renewable energy, affordable basic services, healthcare, education, etc. But I'm not the expert here. That's why we have all these awesome panelists. So Amit, I'd love to start with you. Why don't you get us started, set the stage? How has impact investing developed over the years?
Absolutely. Well, first, I just want to say thank you so much to BetaKit and to my fellow panelists for allowing me to join this conversation. Impact investing, is really becoming quite a phenomenon all around the world. It is an approach to investing. It's serious investing, but it's investing with a that can builds on the historic investing, which is just focusing on trying to maximize financial return for a given level of risk, but it's actually trying to achieve a positive, measurable impact in the world. Now, in terms of who is making impact investments, we see investors kind of across the board, from large institutional investors like pension funds and insurance companies, to individuals who are trying to put their own assets and retirement savings into things that invest in a better future, and as well as corporates, of course, which we'll be talking a lot about the experience of TELUS and what they're seeing from their peers. But what I think is so exciting and so important about this is, impact investing affords an opportunity to allocate capital to have a positive impact on people and the planet. It's serious investing, and you'll hear more about that. It's putting money into serious businesses like Gotcare, but they're businesses with the positive impact embedded into their business model. So I think that's an incredibly important time for us to be talking about impact investing, because if we take a step back and zoom out to the big picture, we're obviously contending with a climate crisis that is wreaking havoc all around the world. We have a lot of inequality that we're trying to address, and many communities who lack access to basic services and needs. And it is absolutely important that investment plays a role in addressing those issues and in capitalizing solutions.
Yeah, and I'm really interested. How have you seen interest from funds and companies in kind of in the impact space grow and develop on the global stage over the past few years?
Well, impact investing is really taking off. And just as a brief bit of background on my organization, the Global Impact Investing Network, or the GIN for short, we have a network of over 40,000 people around the world who are active in impact investing. We have a formal membership that includes over 350 firms and 52 countries, TELUS being one of them. And so our perspective really spans 6 continents. One of the things that I think we've seen even through the COVID crisis is that interest in impact investing has picked up quite a bit all around the world. And I think it's because people are looking around at the world around them and seeing that things aren't working. The system isn't working for people, it's not working for the planet. And for the long term, it doesn't look that promising for investors. So I think many investors are looking at how do they spur the innovation to drive a more sustainable society that's more inclusive and also lives in harmony with the planet and with nature. And so those factors combined with a growing track record for impact investments that demonstrate that they're credible, viable investments that are appropriate for any portfolio are really leading to a surge of interest in impact investing all around the world.
Hmm. And I'd be really curious, you come at this from a really global lens. Where do you kind of see Canada standing when it comes to impact funds, impact investing, that sort of thing? And Blair, I want to get you in on this, both of you kind of in on this conversation as well, because you're operating impact fund in Canada. So where does kind of Canada stand? And then Blair, will have you jump in.
Well, I think in Canada, we've always seen a number of leading impact investors who have been present, and Blair will talk more about that from his, kind of what he sees in the landscape. But I think what it underscores is that we're barely scratching the surface of the potential for Canada to play a leadership role in impact investing and addressing issues domestically, but also all around the world. And what we have seen is a lot of leadership from the Canadian government trying to drive more activity in impact investment domestically and internationally. And we've seen leading institutions in various sectors who've started to embrace impact investing. But of course, we want to go from the early adopters to the mass adoption. And I think that's the moment of transition I hope that we're in.
Yeah, yeah, really fair point. Blair, what's your experience been in
Yeah,
Canada specifically?
I think Amit hit it well that we're at a point of acceleration in impact investment in Canada. We have been embraced by the community of impact investors, those that are active already today, and are keen to continue to work with the broader ecosystem to drive change, to drive a necessary evolution in how investments are written in the objectives of investments. And if I think back to how the Pollinator Fund came to be, is we're essentially at our 1 year anniversary. Hard to believe, but it's a long-standing and deep commitment, from our CEO, who has really imbued our organization with a social capitalism DNA and a mindset about winning in market is insufficient if you're not creating positive outcomes for the communities that we live, work, and serve in. And so as we, or as Darren looked to drive this sort of next evolution in how we were going to deploy that social capitalism thesis, building on our team member giving history and corporate philanthropy history and practices, impact investing really stood out as kind of the next natural place for us to build a practice and apply, the expertise and knowledge that we had, the tuition gained from 15 years of operating a traditional corporate venture arm, but also borrowing from and looking at some of our newer businesses. I call health a newer business, but we've been in the health space for 10, 15 years now, but still relative to traditional telephony and connecting our customers or connecting Canadians. That's a heritage of over 100 years. But when we look at healthcare, when we look at agriculture, which is an important new business for us and a global business. We're looking for better ways to do things as a company today in Canada and to affect global practices as well. And we see that as a huge opportunity and a necessary condition to drive growth. And, we think it's just incredibly important that there's a theory of change and that we're able to or looking to activate and support mission-driven founders, especially at early stages. From a Pollinator Fund perspective, we look to activate and support in that seed to Series A stage. That may be a little rigid, and I would say usually or typically as very technical terms. But we look to get in and support and work with founders that are mission driven and have a deep commitment to driving the business forward, but driving their business forward in such a way that it is going to produce sustainable and growing impact in positive change. And so many thanks to Chenny for joining us today. And we're fortunate to have been a part of Chenny's last round, and really excited about what Gotcare will bring in terms of positive benefits to the home care workers and also the patients or the customers on the other side.
Yeah. Yeah. And Chenny, I really want to get you into this conversation. And as you were kind of talking, Blair, I was thinking one of the reasons I'm so interested in talking about the topic of just impact investing generally, I think is the time that we all live in right now, right? We're seeing climate change issues. We're seeing social issues. Like, it's just a time where there's an obvious need for investing in things that are going to positively impact, right, our future, if we're going to have a positive kind of future. So, I want to get all of your thoughts. And Chenny, since you haven't been in the conversation yet, maybe we can get you to jump in first, and then Blair and Amit can share their thoughts as well. But why is right now, such an important time for companies and funds to be focusing on that impact lens?
I mean, I think that overall, we've touched on this already, there's just growing inequity in many different areas. And for us, healthcare and access to care being one of those core areas. And COVID has just sort of just highlighted and accelerated those gaps that already existed. As an example, with long-term care homes and home care facilities, in terms of all of the news we have seen relating to COVID and that, all of these things are things that people have been already advocating for. If you talk to caregiver groups and things like that, it's been things that people have been advocating for years. And I just think it's high time that we are, not only do we incentivize and support businesses who are addressing those systemic challenges, but we also figure out how we can sustainably scale those companies as well. Because historically, scaling an impact organization has very much been through a donor lens or philanthropy lens. And we haven't really quite cracked the nut on, Blair, I love the word you used earlier around social capitalism. I feel like we haven't quite cracked the playbook on that yet. So I'm really excited to see organizations like TELUS leading the way and creating channels like this so that we can figure out that answer together.
Right.
Yeah,
I think that's a really good point. Sorry, I think we have a bit of a delay there. Yeah. Go ahead, Blair. No, please share, why, you think now is such an interesting time and such an important time for this.
Yeah, thanks, Megan. And I think Chenny made some great points about timing and COVID, and in the face of a global pandemic, which unfortunately we're still experiencing and continuing to experience new variants in a more protracted timeline than I think anyone would have expected in the beginning. We felt, and certainly the drive from our CEO was that now was a critically important time to come to market with the fund. So launching during COVID may not have been ideal from a business plan perspective, But Darren felt it was an imperative to invest in Canada and invest in Canadians and invest now to help foster positive change in a time where, everything got more challenging. And as Chenny mentioned, there were necessary changes to how the logistics of day-to-day life ran, right? So we're here, on a platform as opposed to here, sitting on a physical panel on stage together. And that's, a very simple and minor adjustment, to or vis-a-vis what many citizens have had to go through and have struggled with during COVID. And I think one of our pillars is building inclusive communities. And I think Chenny also hit right on the head that COVID has been more divisive or has been more isolating. So it hasn't brought communities more together. It's created more challenges, and we see more issues around accessibility and inclusivity as a result. And so we think there's just, now there's a great opportunity in this disruption. So despite it not being an ideal time, I don't know that there's ever an ideal time, but it's not waiting to start to drive change. And so for us, it was about acting now and trying to act as, an encourager of others, them to act, for other corporates to invest. If we can be a catalyst in any way, sharing the tuition and knowledge from what we've learned coming to market in a fairly tumultuous time, we'd be pleased to do so, because again, at the $100 million commitment from TELUS is a very significant one. But obviously, more is required. And so to the extent that, our activity in this space can catalyze growth in organizations like Chenny's and Gotcare, but also to the extent that it can help encourage others. Like, we've been inspired by the activity and action of others in this space. And, so we want to share and try and build that ecosystem and build that coalition of the willing.
Yeah. No, that's super interesting. I'm wondering, Amit, do you feel that impact investing is having a moment right now? Is now a really important time to see this? Or, you've kind of got a little bit more of a timeline here that you can kind of share with us. Like, is this an important time for impact investing?
I absolutely think it is. And, I think, impact investing really kind of had its initial kind of unveiling to most people in the world, quite some time ago. The GIN was founded in 2009, and the term impact investing was brand new, although people have been doing it for quite some time under different names. It could be community investing, or investing in sustainable agriculture or microfinance and beyond. But what I think is important is that, over the last kind of decade plus, there's been a lot of groundwork being done to help develop this as an industry that can move capital at scale. And now we actually see some of the needs that Blair spoke to and Chenny spoke to certainly being highlighted and elevated in a way. And I think what Chenny's point is absolutely critical around COVID is that a lot of these issues are not new due to the pandemic. They are exacerbated. These are fissures in our system that existed before, and it's important for those founders and entrepreneurs who really want to help fill those gaps. Make sure that people get access to critical services, whether it's healthy, sustainable food, or healthcare, or education, or kind of access to financial capital that can allow them to build businesses that create opportunity for their communities. It is important that the investment world actually helps to fill those gaps and solve those problems. And fundamentally, that's what impact investing is about, but in a very disciplined way. Where there's a specific strategy around how you're going to achieve that outcome. You measure your performance just as you think about your financial performance. When investors have targets and goals, and they measure their performance against it. And so I think it is a moment now, which I think is incredibly, it's daunting in terms of the challenges that we're facing, but it's also exciting because we have a much broader toolkit available to society. It's not just the role of government to help solve social problems, though their work is important. It's not just the work of traditional charities and nonprofit organizations and NGOs. Their work is important as well, but we also need to make sure that if we want a world that is sustainable and inclusive for all, that we change the way that the world invests. And we now see many, many mainstream actors waking up to this possibility. And that's why it's important for people who are pioneering this approach, like the TELUS Pollinator Fund, to really help pave the way for others to follow. And I really appreciate that point that Blair raised, that every corporate leader should be thinking about their financial assets and how they can activate them for a positive impact for their local community or for the world at large. And I think that's an incredibly exciting opportunity that we're looking at the GIN right now, is corporates as impact investors, in addition to traditional investors allocating capital for impact.
Yeah, and one point you had there as well was about kind of the metrics. We actually had a question in from one of our viewers, and I know we wanted to discuss this as well. Is okay, we understand. I think we understand impact investing is important, right? Investing in these companies, making sure that we're helping people with their healthcare, improving the climate, et cetera, is obviously very important. But investors need and want returns, right? So how do you kind of measure your investments? How do funds kind of track the metrics? What succeeds, what doesn't in an impact investing lens? Amit, maybe you can start us off, and then Blair, you can jump in.
This is something that's very core to the GIN's work, and we think is absolutely critical to building a market at scale. And what I mean by that is moving capital to high impact projects with integrity, which we think is absolutely critical. So we make sure we're actually having real results that land for people on the planet, not just great intentions and aspirations. Our big contribution to the space is the development of a system called Iris Plus, which is used by over 20,000 folks around the world, including many large investors, asset managers, and asset owners. And it is a system, it's freely available. So folks can just look up Iris at thegin.org, and it helps investors take a specific issue. Blair spoke about sustainable agriculture, or a theme like gender equity, and identify the strategies that investors can use and the specific metrics that are backed up by evidence that you can use to measure your performance. We believe this is really critical. We're operating in an age of data. People want data on everything. How many steps you take, how many times your heart beats, what your financial returns are. And it's important that if we are trying to drive a race to the top when it comes to impact performance, not just financial performance, that we have the data and analytics to support that. So we believe that's absolutely critical. And now one thing I think is incredibly exciting is that most mainstream investors who are thinking about impact investing are really passionate about measurements, because they, investors are driven by data. They want to understand how things are performing. And so the demand for Iris Plus and impact measurement has gone up dramatically. And it's really critical, though, that investors are not just thinking about great data for reporting, but how it influences their decision making. How it helps take their approach to companies like Gotcare and say, how do I actually help you succeed in your mission as an investor, which is what every investor wants to do, but opening that dimension up, not just to financial performance, but also to the impact performance.
Mm-hmm. Yeah. So Blair, bringing you into this conversation, how do you think about metrics, seeing performance, seeing success when making these types of investments?
Yeah, for us, it's about balancing profit with purpose, and I think also looking at kind of a timeline. Again, our typical investment would be, first check would be into a seed to the Series A stage company. So early stage, and having a founder and a team that is mission driven, that has a theory of change that is well articulated and deeply held as a cultural way of being is incredibly important to us, because we're not looking for a return on next quarter. But working with the founders to define metrics is for improvements in sustainability or positive outcomes or social outcomes is part of every deal that we write. So we look for and define with the founders measures that are linked to the business performance and the theory of change. Meaning, we always look to invest in businesses where, as the economics improve and as the business grows, we will see a greater activity or outcomes on the impact side. So we look for that virtuous flywheel. because we're aware that there's this, sort of moral hazard that could occur in businesses where, founders look at trading off impact for financials. And, we want to know that there is a commitment to the theory of change and that it is part of the culture of the organization, because long run, that will lead to, sustainable growth and a broadening footprint of positive impact. And so, again, we think that's incredibly important. From a TELUS perspective, how we compete and win in market and drive loyalty and customer outcomes is really, it's a focus on doing good and putting our customers first. And I think a lot of organizations say that, but it's deeply held within the TELUS DNA and culture to put the customer first in our processes and solutioning and the products and services that we bring to market, and importantly, how we bring them to market. But it's equally a deep commitment to the communities that we live, work, and serve in, that, whether it's a charitable act, team member giving, and or investments, we look at a broad lens or a broad array of vehicles to deploy to, drive that change. And we believe deeply that our commitments on the social capitalism front propel our business success. And, we're able to, as Amit mentioned, quantify that in data sets and surveys when we talk to our customers. So, knowing that the thesis works, that customers care about and want to do business with companies and brands that are looking to drive positive outcomes, I think that's incredibly important to look at, because the companies that aren't committed to that won't have the same financial returns or financial outcomes. So we don't look at this as concessionary. We look at this as evolutionary.
Right. That's a really interesting point. It reminds me actually a bit of Chenny's own journey to finding investors, kind of finding that right investor. Chenny, we've talked earlier prior to this live about kind of your journey to finding, investors that are aligned with what you were doing. So talk us through that journey, because this isn't just one side. It's not all about the investments in the funds. It's about the companies building these like really cool innovations, right? So talk to us about your journey, how you got here, and how you found the right kind of investors to invest in your company.
Yeah. So really quickly, Gotcare, we are a healthcare provider transforming how home care is delivered across the country. And basically, we use technology to reduce the cost of care delivery, and we redirect some of those savings to paying our frontline workers a real living wage. And so I remember speaking to my team before we raised money, and I said, okay, so let me get this right. You want me to go in front of investors and pitch paying people a living wage? Just want to make sure I got that right. And it's challenging, right? And I think that, and this is where the tension, and the balance that Blair was talking about in terms of purpose and profit, that's where the real examples of where that lives. And I think that, coming back to those metrics, it's really also, I feel that impact investing allows us to not just look at short-term metrics, but it's actually a really great way to look at long-term metrics. And I think that long tail lens is something that's currently missing from the current paradigm a lot of the time. So for us, it was getting just really grounded and confident and telling our impact story, and not sort of trying to paint ourselves as a different kind of company. I'll give you an example. Mm-hmm. So to fit into the traditional model, we were initially we were pitching ourselves as a marketplace play, which is not technically true, because we take the stance of employing our workers because we believe it's the right thing to do. But it was sort of just trying to find the closest thing and to what already existed. And it truly took a large community for us to even get the courage to pitch in the way that felt authentic and true to us. But the interesting thing is that once we did that, we realized the investors who resonated the most with that message were, impact investors. So for our last round, as an example, our funding came from family offices, foundations, corporate impact investors like TELUS. None of the sort of traditional venture capital groups. And the challenge there is really, as a founder, is sort of identifying where those investors really are, because we're still so early in Canada. And so at this point, it really takes a whole village, truly, for a venture to find impact funding. However, through events like this, and as more organizations beyond TELUS look for ways that they can participate, I believe that overall we can make it easier for Canadian entrepreneurs to choose this as a viable option to scale.
Right. And yeah, kind of bringing back in that idea of, Canada, Gotcare being a Canadian startup, how did you find when you realized, okay, yeah, impact investing, impact investors, that's probably our sweet spot. That's where we fit in. Was it then easy to go find organizations that fit that investor criteria for you in Canada? Or did you have to kind of look outside the border a little bit? Talk to us about that journey.
Yeah, so when I say, a whole village and community who got us here, we worked with organizations like Red Thread Ventures, who helped us get investor ready from an impact lens. We worked with groups like SheEO that has been supporting women and non-binary led ventures, and have always believed in alternative ways of providing capital. Our business coach, our mentors, our advisory group. Really, it was a whole group effort. And but I think that we're talking about the change in appetite during COVID for investors. I think that a lot of us got to see firsthand things that were perhaps hidden from us before. And it's sort of one of those things where I think that once you see it, it's hard to unsee. We just started getting introduced to people who had stories where they had a loved one who had a terrible home care experience, a terrible elder care experience, and didn't want that experience for themselves or for their own children, etc. And it just started there as, this is not the future that I want to leave for my kids and my kids' kids. So let's start to do something about that. And once we, actually, it was interesting because once we found our first couple of investors, the first question I asked was, so, what made you say yes? And at the end, it came back to impact. And that was, coming back to confidence, that was what gave us the confidence to say, okay, we don't need to try to fit into the traditional venture model. We can fully step into this.
Right. Very interesting. One thing I kind of want to narrow in on, would love your guys' thoughts on this, is how does impact investing really differ from traditional VC? I think, Chenny, you've given us a bit of an idea of what it looked like when you're maybe chatting with some traditional investors who, you didn't quite fit into their bucket, but you did for impact. So Amit, Blair, bringing you into this conversation as well, how does impact investing really differ from traditional VC? Maybe Amit, you can start us out.
Sure, happy to do so. And of course, I think in Chenny's experience, kind of right where the rubber meets the road, I think will be incredibly informative about this. But from my perspective, I think fundamentally, impact investors, who are venture investors compared to more conventional venture investors, are valuing different things. So they're still focused on kind of sustainable business models that can grow and scale. They're also trying to understand what is the impact performance potential of a company. So what is the, in addition, not just thinking about the value from a financial perspective that can go back to the shareholders, whoever they may be, but also what are the value that are being delivered to other stakeholders, whether it is, you heard from Chenny about the employees, the caregivers, or if it's the customers or the communities that are, benefiting from those services. And that gets complicated, right? Because you're solving for multiple objectives. And I think that's where the disciplined approach, you heard Blair earlier speak to, when they're making investments, looking at like the theory of change and the strategy, and then how, agreeing with founders on the right metrics and getting aligned, or on how we're going to assess performance. I think it's incredibly exciting. It's a much richer conversation to have, like what are multiple dimensions of performance that we'll use to evaluate success. But I think that's one of the big differences is that it is looking at, it's defining success fundamentally very differently. It's a much more holistic view of like what is value being derived to a variety of important stakeholders. The owners, the entrepreneurs, and the investors, but also the employees, the communities, and the planet. And of course, the composition emphasis varies if you're looking at a sustainable agriculture operation versus something like Gotcare. But I think that is a very different way of thinking about how to invest. And I think in many ways we're seeing a lot of movement. Blair spoke about shift towards social capitalism, but you now see kind of venues all around the world, including ones like the Business Roundtable and the World Economic Forum, talking about this need to shift to a different economic system that actually serves broader interests. I think impact investing is one of the ways to help manifest that.
Mm-hmm. Blair, do you have some thoughts as well?
Yeah, I like what Amit said about the definition of success. And I think that's so incredibly important. And that's part of, very much a part of what we look at, is how a company, a prospective portfolio company, and a founder defines success. In that, profit's incredibly important. We are looking for viable businesses that, we think can and will grow, but as part of that definition of success, it's profit but with a purpose. And the definition of success for us has to be more than just profit, and we believe that's incredibly important to have that commitment, from the founder, and again culturally in an organization, so that that's adhered to, that as that business grows, as it generates more profit and is able to scale, that the theory of change dictates that it will grow its impact as well, whether it's the number of home care workers that get paid a living wage, as well as the patient outcomes, that more patients can be served in a better manner and have a higher or better quality experience. So those things are possible together and can fuel, the economic growth of the organization. So, it can indeed be a virtuous circle and a solid investment thesis. And I think, again, the comment about the timing, I mean, there are very significant global challenges that we're, as a species facing. And if you look at the spaces that we're talking about, agriculture, healthcare, environment, and building inclusive communities, there's incredible opportunities and significant amounts of money, coming into these spaces. So these are not, again, concessionary spaces or concessionary investment thesis. These are areas where there's going to be massive economic return and the ability to do good at the same time, to create sustainable outcomes so that we, are in a better place as a collective of societies, moving forward. And I think, finding means or finding more investors that are embedding impact into every element of their investment process is incredibly important. And again, as Amit really well articulated, is that definition of success. Like, it has to evolve. The definition of success, has to include profit, because again, we believe that business can be a force for good and a force for change. It can't be that if it's not making money. Because it's not sustainable, it won't scale. So again, we very much look for and have to believe in the economic thesis that a company has and that a founder has, and we have to believe they can execute against that thesis. But they also have to have more. There needs to be more than just a for-profit venture. It's, we want to understand the purpose and how the economics, the profit element, links and enables the purpose of the business.
Yeah. How do you balance returns and impact? I think is exactly what you're talking about, right? Like giving that equal balance to both. And I'm actually curious about that question for you, Chenny, as well. As a company who's, focused on making a positive social impact, but you're also a business, right? That there's also a financial side there. So how do you balance returns and impact on the company side?
But I choose to believe that if we don't, then we are not responsibly growing. It's just a choice. So what I mean by that is I can, choose to, so for us, we look at things like how can we provide a really personalized experience? That means matching patients to care workers who speak their same language, who understand their culture, who live really close by. How do we empower them to take ownership over their own health decisions? How do we influence policy to be more flexible to the growing needs of diverse families? How do we make this a good job for care workers? How do we pay them fairly? How do we redesign what their scope can be so that this isn't a quote unquote dead end job anymore? All of these factors, and for me, it's sort of, if you don't try to move the dial on any of those things, then we're going to continue to face the systemic challenges of inconsistency of care, of dealing with late cancellations. Often anyone who's had to procure home care knows that you have a revolving door of home care workers, right? Mom with dementia has 10 people coming through her house every month, which is not good for anyone. So unless we start to address some of these other areas, then we're kind of just beating our head against the wall and trying to optimize for, but then yet the same problems show up again and again. And at the same time, if we cannot build in a sustainable profit, and we don't have a model to grow, then we're also stuck in this in the traditional type of donor fed model too. So it's sort of like both both need to evolve, and I think that impact investing is sort of that bridge in between. So it comes down to
another, Sorry, go ahead.
Yeah, no, I was just going to say it comes down to how, right? Like it's like how we choose to do certain things. Like as an example, how we choose to deliver care, how we choose to track care, how we choose to report on care. Like, and I think it's important that we have investors who are aligned in helping us find those things, because these things are really hard to do and really hard to change as well.
Actually, that relates to one question we got from the viewers, Chenny, that's for you specifically, is how did you overcome hesitancy to pitch your company to investors?
It's a great question. For me, it was connecting to my own inner purpose around why this, why now, and really grounding myself in why I am here. And for me, choosing to start a business is a journey in by choosing to opting in to build something that will create a better impact in the world is actually also a deeply important inner journey of healing ourselves as individual humans, and also growing into people that we can be proud of too. So it's a really, I find that sorry, it's getting a little woo-woo, but I find that the process of building that confidence and overcoming that hesitancy, especially for things like this, is just like a really important inner journey that you go on.
No, I love that. I think that's really great. One thing that is kind of, been on my mind as we talk about impact investing is this kind of idea, of greenwashing. How do you ensure that you found the right investor? They're not just talking about doing impact investing, right? That they actually are focused on it. And how do you then find a company that, as Chenny, you've mentioned, you're really staying focused on that kind of impact part of the business. So I'm really interested in this idea of the relationship between the two. How do you find those individuals? Make sure that, this works on both ends. And how do you continue to ensure that both your investor and your company or portfolio company are continuing with that kind of agreement you guys had around that impact focus. So it's a question for all of you, but Amit, maybe we can get you to jump in here first.
Yeah, absolutely. I mean, it's a really important question. I mean, I'm glad you brought it up because it's a big issue, around because impact investing is becoming very popular. It's like many things that we've seen, like sustainability is very popular. People talk, worry about,
Right.
we think about the term like natural foods and what gets counted in that if you're in the grocery store, because everyone wants to be
Yeah.
natural and healthy, but that means very different things to different people, and so at the Gin, we think one of a critical thing guiding our strategy is this focus on scale with integrity. We need to solve problems at a scale that's commensurate with the issues. And so you heard about like kind of the issues around the lack of access to quality care, and these are systemic issues that cut across many different sectors of society around the world. And so we need to be addressing them at scale. But we also need to be doing that with integrity. So it's not just kind of PR and marketing and kind of great language, but actually is fundamentally driving different results. Because otherwise we're going to be having the same conversation, a couple of years from now. And it also in this time, we are, in an age where there's just like more cynicism, and distrust. And so I think it's very important for companies, for investors to really be embedding impact with integrity, and at least accurately reflecting how this shows up in their practices. These things aren't perfect; they're hard to do. They're always evolving, and it's important to have that commitment to that learning and adaptation, but also to just be very kind of clear about what you can do and what you can't. We think that work with like Iris Plus is absolutely critical because it does actually frame how you are kind of articulating and measuring your performance in a way that you can be transparent to your investors, to your stakeholders, to your employees, in a tangible way. And, that won't capture the full picture, but it does give a measurable, results-driven orientation to this. But I think Blair brought up a point earlier that's really important when he was thinking about businesses for the Pollinator Fund, as from a pipeline perspective. So that they're looking for how impact is embedded into like the entire business. So not just the metrics are a part of it, but it's like how do you actually embed the practices that will lead to those performance measures throughout the operations? And similarly for an investment fund, how does it show up in the way you set your strategy as an investor, in the way you select investments, the way you manage them, the way you think about exits? Are you setting up the company once it's comes out of your portfolio so it can actually continue to grow in a way that will help scale their impact? So I could go on, as you can tell, but I think this is a really important issue, and I'm so glad it is at the crux of the matter at this moment in the world that we are driving real results for people on the planet.
Right. Which is just so important. I think all of us can agree across. Blair, how do you ensure that there's not this greenwashing situation?
Yeah, we think it's incredibly important as well. Again, I think TELUS's long-standing commitment to social capitalism is is important for us, and we're able to provide data points against that in terms of team member hours that we've given in the communities, to the philanthropic commitments that we make, the 13 community boards across Canada, the $100 million Pollinator Fund commitment. Like, these are data points, and they're transparent. And that's what we look for and seek in the relationship with the founder and the companies that we invest in. Is we want an agreement around the impact measures. These are not things we define on our own, and typically the founders come with them. If it's going to be a portfolio company, it's not difficult to get to the point of defining these measures. But it is incredibly important that we are able to, name them, agree on them, and then track against them. So, an example, another one of our portfolio companies, Title Vision, very easy to measure outcomes in a couple of their verticals. So they reduce biomass from being dumped into either landfill or into the ocean. So those are very clear and definable, like it's a tonnage and avoidance right through their upcycling process, so a green upcycling process that they're able to extract a chitosan polymer that has applications in a number of different fields. And another very clear and definable measure is their chitosan product is used in water treatment. One of their key verticals is wastewater treatment. So again, we can look at how they are able to treat wastewater, the volume of wastewater, and what the offset against other chemical treatments of that wastewater would be. The other compelling thing about those measures is that as those numbers scale, you can be confident that the business is scaling as well. And so, the other thing for us that is, compelling is that's a today problem that they're able to affect and address. So it's not, long time scale to, them maybe having a solution. They're monetizing that solution today, and they're growing their impact and creating better, more sustainable agricultural and environmental outcomes. And then when it comes to the, again, the greenwashing, both for Tidal Vision and for the Pollinator Fund, it's incredibly important that we are transparent and data driven. And Amit mentioned that earlier, and I thought it was, again, just to bring that up. That's so important so that, we're not, just trying to say, oh, we're impact driven, but, instead, here are the outcomes that we've created as part of our investment thesis. And, we've shared those in our first annual impact report. And, we took on the impact report because we thought it was important to showcase the change that, we've helped make with the support and through the incredible work and passion of the founders of the organizations that we're partnered with and invested in. And, we think that practice of showing your work, so to speak, and showing the impact is an important way forward, so that there's a believability that we can track, and that collectively we can get, better at that. And I love that concept of scale with integrity. And I thought that was a great one that right.
Mm-hmm. Yeah, all great points. And so, Jenny, I'm wondering now on the startup side, how do you ensure you're finding investors that aren't just saying, oh, yeah, we're interested in the social side of your business too? Like, how do you ensure that you're finding those right investors?
I think you just know.
Just that easy.
There is a bit of an instinctual or gut feeling art to this as well, right? Sure. In terms of whether or not your values aligned. One of the things that I try to do is, whenever I'm meeting an investor for the first time, I try to describe the values and the priorities of our current investors for them to self-identify if there's a fit. Because it's not just about us and the team. There's a whole other group of people who support us who they have to also be aligned with too. So that's sort of one way that I like to sort of help people self-filter. And actually, I consider it to be a win when I meet an investor for the first time, and that alignment is not clear, because actually what I've noticed is that by opening with that, then they say, hey, you know what? That's so great of what you're doing. I actually have someone else in mind that I think you should talk to who would be more aligned with what you're trying to do. So, yeah.
Mm-hmm. Okay, no, that's super interesting. Honestly, I've really enjoyed this conversation with all of you guys today. I think it's been great. I think it doesn't come at a more important time, obviously, when we're still dealing with, COVID, healthcare stuff, social issues, climate issues. It's quite a time to be alive. And I think, the work of impact investing and what you guys are all doing is so important and interesting. So thank you all so much for just taking the time to sit and chat with us about this today. And I really look forward to continuing to follow kind of each of your journeys. So thank you so much for your time.
Thank you.
Thank you, Meg.
Thank you.
Yeah, awesome. And thanks to all of our viewers for watching today's BetaKit Live as well. A reminder that there will be a full write-up on the session on betakit.com, so you can check that out at a later date. Thank you all, and enjoy the rest of your days.